Hi everybody, good morning. That was a really great talk that Ken just gave. Thanks so much for making those great comments. For those who don't know me in the room, and I don't want it to assume that everyone knows everyone up here, so maybe first let's just do introductions. But for those who don't know me, my name is Kalsoom, Lakhani. I'm the co-founder and general partner of IDI Ventures, early stage VC fund. These are my colleagues, so I'm leading the discussion, but I'm also going to be participating as well. It'll be kind of interesting to interview myself, but we'll see what happens. But maybe let's go down the line and first everybody just introduce themselves and their fund, and then we'll get deep into the discussion. Also to frame, we want to make this something that is very interactive, so please feel free to raise your hands. We're going to try to get to questions. Also, before we start, I just wanted for everybody to give a big round of applause to Ali, the Noor, the entire Bot Launch team, because this is incredible. I think a lot of people can feel very demoralized and pessimistic about Pakistan right now, but I feel like Bot Launch has done a really incredible job of making us all feel just really collaborative and optimistic about what's happening. So without further ado, if you guys can introduce yourselves and we'll just dive right in.
Good morning. I'm Aatif Awan. I'm founder of Indus Valley Capital, a state VC fund focused on Pakistan. And we are now on our fund 2, continuing to be very excited about Pakistan.
My name is Nail Ikram. I'm a partner in Fatima Gobi Ventures, sector agnostic, C to Series A. We're also looking at launching a second fund now.
So good morning everyone. I'm Noor Lalani. I'm the managing partner of Lakson Venture Capital. We're a Pakistan-focused firm. Our first fund was launched in 2019 to focus on early stage opportunities. We're currently raising our second fund to focus on early to mid-stage opportunities. We are ostensibly sector agnostic, but we like capital-light disruptive plays backed by experienced founders. Thank you for having me. It's great to see so much talent and representation in the room.
Assalamu alaikum everyone, Rabeel, Warraich, founder of Sarmayacar.
Hi everyone, Faisal Aftab. I'm in the corner here, but I'll lean in.
Do you want us to move down?
No, it's okay. It's okay.
I'm also on the corner, don't worry.
Founder and GP of Zayn VC. This is my second fund in Pakistan. First was Lakson VC, and then now Zayn VC. Done about 27 deals and extremely bullish about Pakistan. I think when we look back in 10 years, this is just going to be a slight adjustment, a correction in the market. So.
Yeah, and actually on that note, I mean, Faisal's kind of been like the canary in the coal mine for a long time, basically calling potentially what was going to happen. So I think we're going to talk about some of the macros that I think are important to mention, because I think if we were to get up here and just be completely optimistic about what's happening, that would not be, I mean, I feel like that would be a little disingenuous, right? Obviously, we are bullish about all the companies that we've invested in. We continue to be investing in Pakistan. But let's also kind of frame what's been happening in the Pakistan startup space. So if we take out the last 2 years, right? 2020 and 2021 were outlier years in a lot of ways, because if you look at what happened, 21, 22. So 2019 onwards, right? So 2019, startups raised 49 million. 2020, that was 65 million. 2021, 350 million. 2022, 355 million. Just to give you guys a sense of stuff, and if we take those out as outlier years, because obviously every emerging market everywhere had a huge influx of capital. But if we look at what's been raised so far this year, startups have raised year to date about 33.2 million via 20 deals that have been reported, right? Obviously, all of us have been doing deals that may not have been mentioned or put out there in the news yet. But I do think that that's important for us to kind of frame where we are today, year to date. That's not necessarily, if we unpack the numbers a little bit, a lot of it, the macro situation in Pakistan has a lot to do with where money is flowing into or money not flowing into the country. Obviously, everyone has been impacted, even in terms of their businesses. But what's also really important is the push and pull, right? So it's not just that startups can't raise funding, but a lot of our startups too are not going out to raise funding right now. A lot of people are putting their heads down and focused on, rather than just growth for growth's sake, really kind of getting sustainability and building in, thinking about their businesses and how to actually get through this winter. But and I was mentioning Faisal, who's a good friend, and we all of us talk to each other quite often. But Faisal's been talking about this for a while. in terms of the macro situation. And we're in a few deals together with Zayn VC, and I know Faisal has been advising his companies, and I know this because there are also some of our companies, to actually be buckling down and preparing for this winter, a lot earlier than maybe some other people were talking about it. But Faisal, I'm just kind of curious right now, because for all of us, we're also talking, as VCs that are up here, we're also raising money. People are talking about their Fund 2s right now. We're raising money, and we're also ambassadors for what's happening in Pakistan. So what is the narrative that you're talking about right now? And for everybody on this, if we can just go down the line from Faisal onwards, what is the narrative that you're saying, and how not to be apologetic about what's happening, but also be really real about the situation? And how are you talking to your founders right now versus what you were talking to them about before?
Sure. So, obviously it's not easy to raise when sentiment is low, but again, as I said, I think if we're long-term investors, so if you look at the 10-year view, you'll see basically that, we have barely, I think 1%, or it might be 1.5, 2% of e-commerce penetration in the country. That number definitely is going to be at least 10x of that in 10 years. So it's a massive opportunity, and I actually think it's going to be faster if you look at comparables like India and Malaysia. You'll actually see that they had analog phones or digital phones that were non-smart, and then basically adoption took place where they're sitting at somewhere. I think China is at 60, India is at 30. So in Pakistan's case, we have a significant chunk of the population with the lag effect of adoption that we had with the smartphones. You're basically going to have much quicker adoption. And so it might be 20x from here. So that's like a positive way of how you pitch that. Look, at the end of the day, this is not correlated to the traditional economy. I do think brick and mortar is going to deflate. That's part of the overall, at least my thesis, that tech is disrupting the industrial age, similar to the way the industrial age disrupted the agrarian age or the landed class. So now, in terms of how we're navigating the market, look, it's just, to me, and I hate to be the bearish guy in the room. I was bearish earlier. I'm actually bullish now in Pakistan, but I'm a long-term investor. So my mindset is that when we look back in 16 to 24 months, we would have realized that the bottom of market sentiment in Pakistan was April to July of 2023. So we actually doubled down. We've deployed about roughly around $7 to $8 million this year. About, I think, roughly 50% of that is in new deals. They'll be announced later this year. And there's been a lot of follow-ons. And actually, there's been an entry of some serious investors quietly in Pakistan that understand that when there's, I hate using this word, but when there's blood on the street, that's when you actually go and invest. And I think this is the time to build positions. It's a huge opportunity, 250 million people. The census is underreported, by the way.
Of course,
It's,
yeah. We've been saying 250 million for a while now, so yeah.
Officially, they said 240. I think it's about 250. That's a huge opportunity.
Yeah.
And bigger than some of the regional players that we look at Indonesia and Malaysia. So I think, I'm very bullish, and I think some of the best tech founders were mini India. So if India is going to be rising like a rocket ship, we would, historically, I would have said we're South Korea to China, or in the region when China rose. Okay, we might be a Vietnam with some of the setbacks we've had, but it's a massive opportunity. So, my 2 cents on that.
No.
The founders, obviously, I'm telling them, hold back, sit tight, do not burn, and scale. Nobody's going to reward you for just having a top line with no fundamentals. So, you need to basically survive till 2024 Q3. I do think the Fed cuts, but that's highly speculative.
Can I ask you something though? I'm going to say, you used to say 2023 to hold to then. So I'm just going to be your friend
No,
and say.
2024.
So has it always been 2024, and are you extending the timeline, or have you always this
It was
prediction as
Q2 2024.
Okay.
If you look at my original post to you in 2022,
Yeah.
I changed it to Q3 2024.
Okay.
The reason is because the Fed actually, they've raised
Right.
significantly, and the market was pricing they cut this year. I personally never thought they would cut into this year, but I thought they'd cut probably by Jan, Feb. It's looking like it might be Q2, but it is an election year.
Yeah.
So I think that we may have a world flush with liquidity by the end of next year.
Yeah, and I say that not to be a gotcha moment, Faisal, about your post, but also because there's so many things that have been so unpredictable, right, this year that we can figure out. And so thinking about what that timeline looks like. Rabeel, do you want to share how you're thinking about things right now?
Yeah, definitely not as smart as Faisal to predict when the recovery is going to be, but like the way we think about
Faisal's
it.
my messiah, by the way. Just like Faisal Aftab said this.
It all works until it doesn't.
The way we think about it is like the longer term opportunity is still, or the thesis is still very much in play. We're at very low digitization, which is only going to increase. The demographic dividend is going to keep paying. Pakistan is now on the venture radar globally, and we've had like a lot of experience of like founders building businesses, investors like ourselves going through our first funds and so on. But I think a lot of the reality is also setting in, right? Like Pakistan continues to be, still is a very nascent market. There are some structural challenges. It is difficult to build businesses anywhere in the world, but in Pakistan maybe especially so. Whether we like to admit it or not, there's a dearth of competent and experienced talent. Even what talent there is, we struggle to keep it within the country. And the ecosystem has also seen its shock moments as well. So funding rounds are unpredictable. There's a lot of effects of that which translate into what models can work and what can't. Spending power of consumers and businesses is fairly limited and maybe even declining. And so to come back to your question, what's the narrative from us is, first of all, acknowledge this, right? Because you don't want to lose the trust of LPs from around the world, investors that are looking at Pakistan, and yes, like the longer term play is there. So first acknowledge, and then try to shape and adapt our investing strategy accordingly, right? So what does that mean? That means basically avoid capital intensive, operationally heavy, slim margin businesses. Now we've learned that after having invested in some of them, and that's how you go through these cycles. So that's what we're trying to stick to, which is like longer term play remains valid. Adapt your strategy in the short term, and learn from your mistakes, maybe some of the more broader ecosystems mistakes, and then hopefully be in a better position to continue forward.
So there is no denying the last year or 18 months has been very difficult, and I think that will continue for a few quarters. I'm colored by my rates. In my former life, I was a rates and inflation sales trader, but I think Faisal's said that more eloquently than I can. But what is our narrative to investors during this period? It's one of truth, deconstructing what are the issues that brought us to this crisis, but also what are the positive factors that are paving the way to recovery. And there are. There's been the standby agreement, the IMF. There is a recovery of foreign reserves. There is a yield curve pointing to lowering of rates next year. We have passed the point potentially of peak pessimism, and I think we've seen cycles like this before. Now it's actually emerging as a good time to invest. Valuations have corrected. To the founders, the messaging has been very clear from us. Firstly, really great job. Both our portfolio founders and other founders have done a fantastic job of cutting their burn, extending their runway, conserving cash. That was the mantra from last year, and many have done it. And that's been really, really a tough job. We delegate to founders. We can't do what founders do, and they have to make these tough decisions. But my message is, at this point, don't become disenchanted. Funding markets will revive sooner than you think. So focus now on what you can do to orient your companies so that they are in pole position for when that funding comes. For example, have you established a business model that adapts to a longer life cycle? I think people got carried away in thinking that you'll have an exit in 1,000 days. That's just not the case. Do you have a clear, articulable strategy for getting to profitability? Look, funding will come, and it will come when it trickles, it pours. But I think it will be a lot more discerning the next time around.
Thanks for that. What about you, Niall, and MGB?
Our narrative has not changed. We're long-term investors. We're in it for the long run. We're here for, like Faisal said, with the 10-year cycle. And in Pakistan, I think if there's something that is sure, is that these downturns will happen, and that you have to navigate through them. This is something that's not in our control, something like the weather. But we've told our founders to keep executing, keep doing what they're doing, and just the way this time came, it would also go. But we understand that in the long run, Pakistan, as we all are in line with, we've seen it. We go through the rough times, and then it gets a lot better. And that's the time that we think that Pakistan will come out on top.
So our experience with the LPs actually has been surprisingly not that bad, and I think one of the reasons is that LPs are allocating this as risk capital, so they're not too concerned about like what's happening specifically in this month in Pakistan. Really, this is emerging market, frontier market capital, and it's also important to put all these numbers and narratives in context. So yes, funding is down in Pakistan, but it's down everywhere. If you look at H1 of 2023 year-over-year, India is down 60%, MENA is down 64%, Latin is down 83%. Now we're very getting close to Pakistan territory if you factor in some of the unannounced stuff. And those numbers for other markets, because those markets have evolved more, that includes debt, that includes large mega rounds, which we hadn't won this year. So that's why Pakistan feels like it's much more down, but I think it's actually not as bad. This is the natural course when you are going through a global market cycle, and that's driving it. It's not Pakistan's macro that's driving it. I think like once the global macro corrects, despite Pakistan's macro, you will see that capital come back. So that's one. Number two, like everybody emphasized, the startup opportunity in Pakistan, it's not as much a function of our macro economy, how fast it grows. If it grows at 6%, it's amazing. If it grows at 3% for the next decade, it's okay. I think that's not going to determine how big the startups get. It's a function of the economy coming online. So when you go from 2% to 20%, that's a 10x in a decade. And I think that's what determines this opportunity. So for our LPs, what we tell them is, look, when we started Fund 1 3.5 years ago, we were asking some big questions. What were those questions? And those were like really, really important questions. Will great founders even build startups in Pakistan? In 2019, that wasn't obvious. We had just one or two, examples to go by. Now we've seen, like many of them have come and done it, and they're building in this very challenging circumstances. The second question was, will they have get access to follow-on capital? And we had 2 years of $350 million in capital. So now we've proven that we will, assuming global conditions are right. And number three was, exits. So now we've answered 2 of those 3 questions. The exit question, I think we still need to work on. And that resonates with our LPs. And to founders, it's a very simple message. That economy coming online, if you build a category winning company, that is a massive outcome, right? Definitely risks have gone higher in this capital constrained environment, so you have to adapt to that, but don't lose sight of that large vision, and you still have to figure out both growth and profitability. Maybe the order is a bit different now, but you have to really still aim for being a category winner to have that big outcome.
Yeah, 100%. And I think what's interesting now, right, is that as really we were talking about, it's like if we invested in capital intensive businesses before, but if we really want to, like, where do we allocate our capital now? Maybe not to be to those types of businesses where the winter is going to be a bit long and you need to actually be able to hunker down and have enough capital. And I think that's informing how, at least for us, at least at iVentures, and Ms. Buzz in the audience too, my partner, for us it's like just also saying, the narrative doesn't shift exactly, but you have to be real about where are the opportunities right now, right? And the opportunities are just shifting because the landscape is shifting. And so as an example, like we haven't announced, but recently closed a deal in a SaaS integrations company that's focused on the US market, right? Earning USD revenue. And so obviously really good opportunity, obviously, mitigate some of the risks that we talked about. But for you guys, what are the spaces, or maybe if you want to talk about a deal that maybe you just recently did, that really kind of exemplifies to you, even if the narrative isn't shifting, that maybe a shift in strategy or things that you might find exciting now that may not have been as exciting before, but is now emerging because of the current situation. Do you want to share?
Yes, it's been exciting to see the evolution. When we were starting, everybody would ask, when will SaaS happen in Pakistan? When will you see like B2B horizontal stuff? And it was just a matter of time. What we are seeing is that the earlier first wave, we had a lot more B2C, and we had B2B, which was vertical, right? So B2C, we did Mukhtar on head tech, Maram on health tech. B2B vertical, it's like companies like Bazaar who are doing the retail marketplace and then trucking marketplace, but they're solving a vertical problem. What we are seeing now is actually a lot more B2B companies that are solving these horizontal problems. And that's very exciting because those are the building blocks for businesses in Pakistan. So for example, we recently invested in Pesmo. Payroll is a huge pain point for any business, small or large in Pakistan. It's literally done by emailing spreadsheets to your banker and then there are mistakes and they say, oh, adjust it next time, right? So they're building a software. It's a problem that's been done, in a lot of developed markets. Pesmo is doing for Pakistan and emerging markets. We have recently also invested in Zip, which is solving the logistics problem by building EVs and a battery swapping solution right here in Pakistan, right? So that's the sort of things we are seeing a lot more and getting super excited about in this environment.
Great.
For us, what's really exciting is right now in Pakistan, and a place where we think a lot of that can also unleash a lot of potential is lending. I think in Pakistan, we see a lot of the banks who don't lend to the public and just kind of lending to the government. With these startups that we have that are solving for that problem right now, we think can really unleash the potential in the economy. And we see a lot of great founders solving for that. With that, it will also give a lot of people the ability to innovate. So lending is one that we are really excited about and backing. Also on the space with inflation and the Pakistani population being so price sensitive, companies and founders that are able to bring value to the consumer through their efficiencies, through their technologies. We have some great founders that we've backed. So, and then be able to, through those efficiencies, reduce the cost in this high inflation time, which we've seen is working, and then is because of that is also increasing adoption within those consumers.
So firstly, congratulations, Aatif. Really interesting deals. What made me happy to hear about them in particular is the fact that they are in underrepresented sectors, and we certainly would like to see in the next phase a greater variety of companies, be it software, be it gaming, be it platforms. I'm just going to widen, perhaps answer it in a slightly different way, and talk about how we look at sectors and what gets us going and excites us. So where we think the ecosystem's untouched. So let me actually mention insurance. Digital insurance is barely penetrated. The ecosystem is pretty much non-existent for it. The incumbents have digital presences, but they've not had traction. There are structural issues. You can't simply go and copy and paste the companies in India because we have a demand issue. We have a skew towards commercial lines. There are all these issues, and we would like to see, it's really ripe for disruption, and we would like to see founders who are thinking of the entire ecosystem around it from scratch, and see their solutions. There will be iterations in that space. So if there are any founders who are working in that space, we'd love to chat to you. But that's just to give you an idea of how we're looking at our next fund.
So at Sarmayacar, we're actually thinking of introducing a new strategy which is focused on climate, with hopefully a dedicated fund for the country. I know it sounds crazy, as VC did back in 2018 when we set up our first fund, but Pakistan has been disproportionately affected from climate change, and one way to kickstart really an ecosystem of early stage ventures is to be backing them. And so we think this can operate in parallel to what is currently like the tech fund that we have. And so hopefully in the coming months, you'll hear more about it. But the idea is really that we collectively as an ecosystem have now experience of building some track record, seeing some of the, hand-holding those founders in the early stages, really playing a role in connecting the dots between other ecosystems that are more mature in a particular space. And we'll keep finding individual spaces that are underpenetrated in what we're doing already. But we're quite excited about this new climate strategy that we're about to launch.
And I don't think people would call you crazy. We're literally in a climate apocalypse right now. So yes, for sure. Go ahead.
Yes, so for us, the thesis hasn't changed much right from the beginning. It's a thesis-driven mindset in terms of the way we invest. So we've invested in a lot of B2C commerce deals. we've done B2B, one co-invested with Aatif in Bazaar, and then we've done a lot of fintech deals. The way we view the market is as a network, and so it's really driven by the informal economy in Pakistan, that we can also say is effectively that's what's being digitized as well. So we're literally going after companies that are capturing those segments. So in fintech, the deals that we did this year slightly shifted focus a little bit, where historically we were focusing on lending, and I think some of the best lending pays were funded in the last, in 2022. This year we moved in on the infrastructure layer in fintech. And so the focus there was, one is a co-investment with Fatima Gobi, it's called Adelphi.
Yep.
They're pretty stellar credit scoring engine, true credit scoring engine for Pakistan. Ideally in an open API setting, similar to Lakson and the voice realm, where they basically want to facilitate all the other fintechs out there for their loan books and credit assessment. Then we've done Habal, which hasn't been announced officially, but I mean, it's posted on our website, the fundraise. They're a massive supply chain platform, settlement platform. So in infrastructure there, so clients are like Coca-Cola, PepsiCo, and basically they have loan books from banks. The local banks have actually taken a risk and put up $33 million. It's off the balance sheet of, let's say, Coca-Cola or PepsiCo, but they're lending through Habal. And so it's very interesting to see how big this economy is. I mean, technically they're already touching almost 0.5% of the GDP in terms of that particular segment. Then we've done Edufy this year, which is Alina's, I think, in the audience. She's building, we're going after the higher education market in Pakistan. And so it's, I mean, if you follow the theme, it's basically just going after similar type of informal segments in Pakistan. And what you were saying earlier in Fatima Gobi, in terms of the banks, I think one of the biggest things for me also is that if you look at HBL, so lending is going to be a huge focus. You've got a massive multi-billion-dollar deposit base, and if you look at the actual loan book at HBL, it's very limited, right? And so we want to change that, and I think companies like Avi and multiple other lending places are solving that, and we're seeing the growth there.
Yeah, and I think that's also an important point, right? It's not just the deals that we're excited about that we're doing now, but also even how our companies are behaving in our portfolio, how they're pivoting, adjusting themselves for the realities. But I think when we talk about any startup ecosystem, there's going to be companies that don't make it, right? I mean, that's just the reality. I think even more so now, there's going to be companies that don't make it, and then some of them that haven't or have announced pivots or things like that. To me, I find it really demoralizing the way that people react to that, because it's almost automatically people are like fraud, right? And I'm like, not necessarily. And you know, obviously there's so many other reasons companies can fail. We don't owe anyone an explanation for that, but I do think that it's really interesting, and Harry Stebbings talked about it on his podcast with Sarmayacar recently, where he said Pakistanis just really don't like to see each other succeed. First of all, I find that terrible when people outside of Pakistan say that about us, which I think is just an awful sentiment to have, but it is kind of true when you've seen kind of the amount of gotcha journalism that has come out about companies in the ecosystem, and also how people have been tweeting about things, about, you know, where we put our money. I think some of it is legitimate. I think we should be having honest conversations about what works and what doesn't work in order for companies to learn from one another. But I'm curious about, for you guys, and whoever wants to maybe answer this, how do you guys kind of manage? First of all, I mean, you know, it's a really tough call when a company decides to shut down. It's not easy, and people don't make those decisions on a whim, right? But first of all, how do you manage kind of the optics around that? How do you feel like we should be talking about it? And then also, how do we do it in a form of, like, because we don't owe explanations for the most part, but how do we be really open and real about some of the things that can happen or have happened already? And I'm curious if anyone wants to dive into that.
Right. So the surprising thing about Pakistani startup ecosystem for me is actually not enough startups have failed. If you look at the number of startups that have raised, let's say, $1 million or more, there are about, I think, between 80 to 100 startups that have done that. We know that last 18 months have been tough, so a lot of them had done it 2021 or earlier. And like normally what happens is you raise that round and it's to prove that you can build a product, have product market fit, and if you don't, you fail, and it's fine. If you have some money left over, you give it back to investors, or you just wind it down if you spend it all, and then you take some time off and figure out what you want to do next, right? And 30-40% of the startups will figure that out in 2 years. In Pakistan, I think like not even 10% of those startups have failed yet. And I think part of it goes back to this stigma that's associated with failure, just culturally as well. And this was the same in India as well early on. But ecosystems take some time for that to understand, because normally when somebody loses their job, closes their business, parents, society, relatives, like people just don't approve of that and look very negatively at that. This is different. I think we expect the failure is the expected outcome. So part of it is cultural, part of it is the reaction publicly, but I don't worry about like what a certain reporter would say or somebody tweet. I think it's just not worth paying attention to that. What matters is the conversation that you have with the founders through that process, that you have with your investors, LPs, and how you reflect on that. And we had in our portfolio an early failure airlift, and the first thing I told my LPs was the wrong lesson to draw here would be to not back ambitious founders. So one of the big reasons they failed is like they are still the most ambitious team we have backed, like in a portfolio along with Bazaar. Like those are the two who really were going for the moon. And then obviously that comes with the capital dependency that they could not raise and they failed, but that would be the wrong lesson to learn. And the lesson to learn is more in terms of how do you manage that risk, and like what are some of the things you would have differently in terms of maybe internationalizing sooner or maybe doing it later depending on the capital markets. And that's a longer conversation, but I love having that conversation with anyone, but it's a nuanced conversation, so you don't do it on Twitter in 280 characters.
I just want to echo what Aatif said, because, and to your earlier point, Kalsoom, we don't like to see others succeed, and we also don't want ourselves to be associated with failure, right? So this whole notion of kicking the can down the road, these zombie companies just kind of like going on, struggling to raise, and the longer they survive, the harder it is for them to raise, and they can't get the traction to then justify a raise at a higher valuation or at the same valuation before. So coming back to what Kian earlier said, failures occur. We're in this business of taking risk. Some startups are going to fail. Learn your lessons, get on with it, and in that process, make sure that the founders are also trying to learn the lessons so that they're better equipped for their next ventures. And to be honest, like we don't believe in going back and correcting what a journalist says, etc. Because a lot of it is sensationalist media, right? They want to get clicks, they want to stir up things. They will get like random old employees to say things which aren't necessarily true. Now, are you going to spend your time going and correcting everyone? Because you can't make everyone happy. If we want to do that, let's sell ice cream. Let's not take risk and try to build some companies. But also, we don't want to dwell too much on that, right? Because as an ecosystem, like Aatif said, maybe we haven't had enough failures. A lot of companies that are out there probably in the next year are not going to exist or should not really exist. That doesn't mean that those people should be marked with a cross and they should never have another chance in life. It's really like, can you put your effort and that learning to a more effective use? That's the optimizing, which I'm kind of relating to what Kian said earlier. And I don't think we do enough of it. Another thing that we can learn as VCs and as an ecosystem is that we should be sharing those learnings with the broader ecosystem, right? Like rather than again just trying to protect our turf and trying to justify to a set of LPs why our decisions are right or wrong. It's about really collectively growing as an ecosystem, because the early notion that we had of an ecosystem of competing for limited number of deals and so on. In reality, in our ecosystem, other than 4 or 5 deals, any one of our funds can invest in any of the deals. Right, so the notion of how it's competitive, etc., is no longer there. We're not there as an ecosystem. We need to cross so many levels to get to that point where your portfolios can be different. Right now, it's about creating success stories. Success stories will help retain our talent. Success stories will convince those LPs. Will tell people that in addition to some of the failures, which is an actual function of this asset class, there are now success stories emerging from Pakistan, and it's worth backing because that risk that is being taken is being justified from the returns that are being generated.
Great. Any other last points?
Can I ask the room, investors, who amongst you have lost money? And founders, who's failed? I can bet that moment was an incredible learning experience. It is absolutely necessary. We've all done it. And that is part of an evolution of an ecosystem. that is part of learning and getting better. So let me talk about the investment community. It's called risk capital for a reason. In developed markets, a really good return is a 20% IRR. In places like Pakistan, you can achieve 35% IRR. I don't think my maths is as good as Kian's, but I think that's a 14 to 20x return. And I think when we have conversations with our investors who understand allocation and allocate judiciously to risk capital, they get that. So to your point, Kalsoom, I'm unapologetic with that in that regard when there are failures. But to the family community, and this might sound quite Darwinian, but failure is necessary because it stimulates fast followers and an iteration. That is the very nature of evolution. And to your point, I would like to see that. When I say I would like to see it, I need to see it. We need to see it. And there's nothing wrong with that. I think what is incumbent on us is to make sure, to what you said, Rabeel, that the learnings are widespread. I want to see what the area founders are going to be doing next. I want to see what other company founders who've had to shut shop, they will come back stronger. And to a point that was made on the panel about we're not in an ecosystem where every single VC is competing for deals, where they're pitching and sending room service at 3 a.m. to the competitor to derail them and pitch. Where it's quite the opposite. We need lots of money, and we need VCs to participate in the same rounds. And I think one of the things I'd say to the international investors, and this is not a shameless plug for the local VCs, is work collaboratively with those on the ground to do good due diligence, understand the sectors, understand the unique icebergs that hit the Pakistan market, and I think we'll grow stronger.
Yeah, I do think that collaboration happens, and I see hands up, and so I do want us to be able to get to questions. But before we do, we're talking about learnings for founders, also learnings for ourselves, right? Like sometimes when I think about, would we have done the same deals had we known what we know, right? Like you learn so much in Fund 1, we're all kind of in that, but a lot of us are transitioning to Fund 2s. A lot of those lessons and learnings are informing the strategy of our second funds. I'm just curious for you guys, how is your strategy different in Fund 2 versus Fund 1? What are the lessons that you're carrying with you that is informing how you guys are thinking about the next fund?
One area in which we're trying to get better is this whole estimation of understanding and sizing a market. We love to say 250 million, maybe it's 300 million, but really how many startups have we had beyond Karachi, Lahore, Islamabad, right? And so when you're thinking about your target market size, and what the capacity for paying within that is, we're trying to get better at it, right? Which is again some learnings across many different spaces from our first fund, and it's just one of those things that we're trying to translate into our better deal selection, more effective investments, and not assuming that the ground reality is going to change. So that's one area that I wanted to share that we're trying to actively be better at.
Awesome. Maybe from Faisal and Niall, since you guys haven't spoken.
At Fatima Gobi, we want to stay course that we've been executing on. I think it's absolutely essential right now as what we call this, going through this valley of death, to bring in more additional capital, to be able to support these great founders that are executing, and even in these difficult times, being able to get such great performance, because we see that, and what gives us comfort is that we see the underlying current, where we see demand is there, where we see adoption is also taking place. And like Faisal said, we're from the offline to the online space. There's such a big delta there that has to be met. So we want to stay on course with what we're doing, and I think it's imperative for all of us to have our second funds up and going. Like we said, it's absolutely collaborative ecosystem right now, and to keep pushing with what we all are doing.
So for me, the strategy has been identifying the market gap, focus on returns. So if you fund 1 with Lakson VC, the strategy was pre-Series A. That was the gap back then. And back then, frankly, pre-Series A was so small in terms of check size, but that $500,000 to $1 million really catapulted some of the companies to become leaders in their particular verticals. When Fund 2 came about for me, when I went out on my own with Zayn VC, at that point, the gap was very different. You basically had a really sharp founders with scaling experience that had worked at Foodpanda, Careem, and Daraz. And basically, a lot of them left to create companies. I'm talking about like middle management all the way up to like the second layer, senior layer. So at that point, at the early stage, was where the maximum return was. And I still feel that all of us, the founders we backed in 2020 and 21, are some of the best founders probably that are going to be leaders of the ecosystem in 5 to 10 years. And so Fund 3, it's a wait and see. I'm personally a little bit nervous. I think there's a gap in the market of talent because you have to retool, retrain people that know how to scale. And so there is going to be a bit of saturation. There's too much, when the funds do get raised, I know it seems like a liquidity grid right now, but there'll be too much money sloshing around trying to chase deals. And then that'll again create like, when you're seeing a pre-seed valuation cap of like $10 million in Pakistan, I think it's time to stop investing. Right? It's like kind of the peak of, it's like Bitcoin's peak. Pakistan is very correlated to Bitcoin, by the way, in terms of behavior patterns.
As volatile, maybe.
So, can I?
Yeah, please.
For us, it's been more of an evolution. So Fund 1 was, about $17 million, very concentrated. We made just 9 investments. That we're going to continue, right? So maybe that 9 becomes 15 in Fund 2. We've already made 7 investments from Fund 2. One thing from a strategy perspective, we are mindful of in this capital constrained environment is have more reserves. So Fund 1, for every dollar we invested as initial check, we had $1 as a reserve. We might up that. It might become 60-40. So we are flexible on that. We are pacing. We are keeping the same pacing. So throughout the bubble, like we did 4 to 6 investments a year. 2020, 2021, 2022, 23. That all stays the same. It's very much evolution. 30% larger fund. And one thing, what we have learned is that we are not smarter than the founders as a whole. The market of ideas is very efficient, right? So you have to really listen to founders in terms of where the opportunity is. They see it with a much greater clarity than any VC could within their area. And so those are our, guides. And what we're seeing is that I've talked about a lot more horizontal B2B stuff. We're also seeing a lot of internationalization of revenue opportunities. So PESMO is not just building for Pakistan, they're also going to build it for all emerging markets. FarmDAR, which started, it's an agri-tech using AI and satellite maps to improve agri-productivity, and started off selling this to sugar mills in Pakistan. But now have a JV in Brazil with an insurance company there, and are selling to, international companies across the region. So that, I think, is emerging as a big theme. But we're sector agnostic, pretty flexible, and we'll let founders guide our strategy on that.
So I was not the architect of Fund 1, but when I look at its core strategy of investing in really experienced founders who really understood their sector and what they were solving for, it's borne fruit. The current portfolio is up on dollarized IRR of over 50%, and we see clear emerging winners. So I wouldn't materially change the core strategy for subsequent funds. But having said that, I think next time around we would like to have more dry powder so that we can double down on our emerging winners and write larger checks. Coming to your point, Faisal, about pre-seed and seed. So when I look at when the first fund was launched in 2019, there was a complete dearth of any type of funding, and the startup system was highly embryonic in any case. Today, there are more avenues for pre-seed and seed, be it angel networks and other dedicated funds. But what we do see a Series A plus funding gap, and we think that there are opportunities there. You have a maturing founder base who've done the work for the last 2.5 years, and we think that we'd like to focus on those stages as well. We think we can deliver outsized returns in that space.
Great. We're talking about investing. A lot of us on this panel, we obviously have co-invested together. I actually think right now, more importantly than ever, I think collaboration is going to be important, especially amongst all of us, right? We're talking about having funds that have, our second funds, having more dry powder because that's necessary. It's also probably more necessary to be co-investing together than before. And obviously, in the heyday of 2021, 2022, there was a lot of competition for deals. So that didn't always happen. We weren't always playing nice, right? If we want to be real about what happened, right? But I think right now it's like you kind of have to put, the knives down. You have to like actually be able to think about the industry as a whole. And I think for those who may have been seeing some stuff out there, there is, and this was actually announced in 2018, there is a venture capital association in Pakistan that we announced in 2018. It kind of went a little bit, inactive for a while. But if you've been seeing some activity out there, we started to put out statements together, and we are the founding members, who are actually all on this panel. Are we all on this panel, the founding members? Yes. Zayn VC, Sarmayacar, Fatima Gobi, Indus Valley, and us at IDI Ventures. We started to put out statements in response to some of the things that were happening, like the personal data protection bill, the internet blockage, and then realizing that putting out statements, everyone was like, who is this mysterious VCAP and what's going on behind the curtain, right? So realizing it's actually important for us to build something here, like with this body, most ecosystems have an industry body or an industry association that advocates for the venture capital space, the startup space. We now actually today are announcing VCAP, not just with the founding members, but also with Lakson as a member, Systems Limited Ventures, DOSI, global VCs as well in terms of Sharuk, Conjunction, Orbit Startups, Gates Strategic Investment Fund, Sturgeon, obviously in the room, Vostok also in the room, VentureSouk, K3 Diversity Ventures, MEV, 500 Global. What that stands to mean is not just the names, right? But how do we actually build together? And I'm just curious for you guys, like, what's important in terms of how we can be better as an industry, right? Like, not just saying we're collaborating for collaboration's sake, not just like meeting up at these conferences, like having some coffee together, like taking pictures. What does collaboration really mean? What can we be doing better as an industry?
So look, this is not a zero-sum game at all, and collaboration makes everyone better. There are just not enough startups in Pakistan, there are not enough VC funds in Pakistan, so I've always believed actually we need a lot more. And you have to, calibrate this, and it has to be in the middle, right? So let's say one extreme of that is nobody is doing any deals together, and that's obviously bad. And the other extreme is we don't have enough funding. It's like 5 or 6 funds, and let's say every deal comes, we all kind of look at it together, all set the price, so almost go to the collusion part of that. That's never good for founders. So it naturally evolves. There will be a balance. There will be certain things we prioritize, and I think we're talking a lot more as a group, so that's exciting. And we'll see more co-investments out of that. I think there's another type of collaboration in the ecosystem that's very much needed, especially in this environment, which is our portfolio companies collaborating more and more. So I've been making some connections even at this event. They can be each other's customers, partners, and we haven't seen enough of that. And an extension of that is, as capital dries up, some startups do need that exit opportunity. And again, this is a cultural thing, right? Like, we should not be egoistic about it. You need to build these relationships. We need to sometimes sell these startups. Maybe there's not going to be enough financial upside on that transaction as you thought, but the company is not doing well, and that's what is the right thing to do. And we're not having enough of that conversation. So I think bringing more founders together, and Park Launch has done an incredible job of this. Like, people are talking more. We need to, see the next step of that, and actually people doing more deals together and having more M&A in the ecosystem.
Should we sing Kumbaya together?
One thing I want to add, I think we should stop talking crap about each other behind each other's back, because whenever we go out, you learn. No, again, this was pointed out at last year's 92 Disrupt conference. We all understand we go to the same LPs. One way of winning is to drag everyone else down. One way of winning is to be the best. But I think we need to get out of that mindset. We need to, it's hard enough to sell Pakistan as a story, as a thesis. And to Aatif's point, we need more investors. We need more people taking that risk. And it's just not productive. I think it's just like, again, note to self as well and everyone else. I think we need to grow the pie. We don't need to think of it as a zero-sum game. But really, we need to stop doing it. We need to get beyond that stage.
Adding to Rabeel's point on that as well, absolutely. I think when anything like that happens, only the ecosystem is impacted and affected. I think in terms of collaboration, what we have to do is how I would like to collaborate with everyone on this panel is to take Pakistan and as an opportunity and bring visibility to it that it deserves. And the opportunity, we all have different strategies as to how we want to execute and what we think is the right way of doing investments. But one thing that we all agree on is that Pakistan is a space. It's one of the most undiscovered, one of the last few undiscovered economies left, and there's the best talent, I think, perhaps in terms of founder. That's a review across the board we get at best quality of founders. So there's a lot that can happen here, and would like to work with everyone and collaborate with us through this association as well to bring that visibility to Pakistan.
Great. Oh, go ahead.
So, with regards to collaboration with international investors and local VCs, I think what we need for the second phase is more international investors having consistent programs of investment, such as Shuru, such as Sturgeon. That consistency is what is key. And I mentioned earlier, I think there is a massive opportunity for local VCs whose USB is to understand on-ground realities, to work collaboratively and diligence deals, so it gives investors more confidence, and then you have a spiraling effect. With regards to collaboration amongst local VCs, it's pretty clear. If two VCs invest in similar rounds, not different rounds, similar rounds in a startup, that startup, the benefit is absolutely exponential. And there's a complete alignment, an optimal alignment of incentives. And I think, really happy to learn about BCAP, and I think organizations like that will be very useful in promoting that. I think collaboratively we can do much more. One of my colleagues, she's in the audience, Aisha, is, for example, involved in Tech for Women initiatives. We need all of that, and we need to work together. There are not enough resources, and we try and do it individually.
Yeah, and I mean, to be clear, many of us have been co-investing together, right? I think the purpose of VCAP, the purpose of collaboration, or the purpose of what our ecosystem needs to do needs to go beyond just putting dollars in, because obviously we know that that's going to be important for companies, but actually saying like we need to be advocating for change, right? Especially when you have a government that might be doing things that we don't agree with, right? It actually is more powerful for us to be able to advocate together rather than being in silos. I mean, so many of us are in a million working groups, and oftentimes those working groups aren't speaking to each other, and so how much more powerful could it be as a body to be able to put things out there, to be able to push things forward and push the envelope. I'm going to ask one more question here, and then also then open it up for questions from the audience. But for you guys, I think what's really interesting is that I've at least heard this, I know that we talk about this, is that a lot of us as funds talk about being founder friendly, right? It is the most amorphous term because it's really a question of like, what does that actually mean? How do you actually show up for your company? And what would your companies say about you, right? Because I think what I always say to, when we've gotten into really competitive deals before, what we'll always tell, like at II Ventures, we'll always tell our founders, or founders that we want to be in their deals, go talk to our founders, right? Go talk to our portfolio companies, because they are actually much better brand ambassadors, because we'll tell you everything about being founder friendly, but it doesn't mean anything if you're not actually doing it. And so we feel really proud about what that means for us and what that has meant for our companies and how they talk about us. But I'm curious for you guys, like what does it mean to show up for your companies, especially right now, right? Like what is it that you're digging into? Are there specific things that you like to focus on? And also, what would your companies say about you? Maybe we can ask also the people in the audience that, but maybe for you, and if you're wrong, people can be like, false. But maybe let's take that question. Maybe let's start with Faisal.
Yeah, sure. So, for me, it's just being a soundboard for a lot of the founders that we've invested in, and really help guide them and try to basically work closely with them. But it really changes, like when there were just 5 portfolio companies, it was a lot easier. It's become a lot tougher with 22 portfolio companies. But we try to be available. It's usually less, and I think we have to do more of this. That is one thing that's needed in Pakistan governance. But I find it easier for me, at least, just to have WhatsApp groups with each one of them to constantly share ideas and exchange thoughts. And it's a joint effort, collaborative, and then help them raise the subsequent rounds.
Yeah, that's a big one.
I hope our company's brand, our support as a form of tough love. Right? Like we have a fiduciary duty to our LPs, so practices around governance, etc. They're for the most part non-negotiable. But as long as integrity of founders is not in question, we will support them through thick and thin, right? Like, it's not just capital, it's about really providing maybe a soundboard, but also, like, helping them maintain their sanity in times like this, helping them think through how to pivot when it's required. So, like, when we get in, it really is like a marriage. And maybe some of that tough love is kind of like, shown at the beginning, because we take our time to, like, again, due diligence, but once you're in it together. So that's what we at least like to practice.
Yeah, so founder friendly to us means doing something demonstrably more than just giving risk capital. So let me give you a tangible example. One of our favorite portfolio companies, Bookme, it's led by Faisal. He's a really astute founder.
How would your other portfolio companies feel when saying my favorite portfolio?
So a few years ago, they were bidding on a PCB contract, but they required physical premises. They're an online travel agency. And what LVC were able to do were to facilitate the use of over 80 McDonald's premises, and they went on to win a 3-year PCB contract. So that's a tangible example of what we can do, and it is sort of incumbent on us to extend our resources and our network. And the point I want to make is it's not just to our portfolio company founders, but to founders who we cannot invest in at this point in time, because we may invest at the next time, or in their next venture, or we will learn something in their discourse. So I think I certainly think that, well, firstly, if there are any who want to have a conversation and think that we can help them through our greater ecosystem, please reach out. I think that's really important.
I think if we were to ask most of the founders about us who work with us, I think one thing they would say is that we're definitely not a firm where you become best friends with us, or we hang out together. That's not kind of in our DNA. But what we are is where I feel our founders feel very comfortable to have conversations with us. May it be good and the bad. They know we'll sit down with them. We'll have those conversations with them. We'll help them to navigate through whatever comes. And that can happen at any time. You can send us messages at 2 a.m. So that part of the relationship, I do believe, is there with them. And one where we want to help them not only with our kind of local network, but not only help them navigate through Pakistan, but also help them solving world problems and solutions through our joint venture.
So I'll draw an interesting analogy. So if you look at the 1980s greed is good era, 1990s, and I'm talking about companies first. There was this notion that the only job of a CEO of a company is to maximize shareholder value. And then in 2000, recently, that notion has evolved. Actually, the way you maximize shareholder value in the long term is by taking care of your customers, then taking care of your employees, and that's what does it. So you don't put investors first. So that's how I think of, when you think about founders and LPs, yes, fiduciary duty, maximize returns for LPs, but over the long run. It's not even just one fund, right? Like you're building a series of funds and do it. And you do that by, like investing in founders, being there for them, and, putting them first in many ways. So we absolutely do that, right? Now, what does that mean in practice? It means, it doesn't matter if a company is no longer going to drive the returns for your fund, right? You still have to be there for them. It means, taking that 1 a.m. call. Hamza is here, like he's done that a few times. Earlier in Bazaar's history, we have done that. It means working together on strategy. It means, working on fundraising. It means, sometimes giving up your management fee to make a round happen. So it can vary across the board, but I think that's the philosophy we want to go with. And ultimately, I truly believe that it's the founders who pick you. Yes, capital constrained markets, sometimes, it feels like founders need the money more, but the best founders always have a choice. They pick you. The way you win best founders is by always doing the right thing for all your founders, not just the ones who are doing well.
Yeah, and I love the idea of saying founder first versus founder friendly. Also, to what we were saying about, being the 2 a.m. call, like we're often the 2 a.m. call that happens, but that preludes that you have the trust of the founders, right? They know that you're not going to be the ones that are just going to not pick up the phone, right? And so to build that, I think, takes a lot. And we also, besides like doing that stuff that everyone mentioned, we also dig in on certain things, right? We help on talent, right? We help on hiring and retention. I know you guys do too. And so I think that's really important for all of us. Let's open it up to the audience if there are any questions. You have this opportunity to put us all in the hot seat. Yes?
All your founders are calling you at 1, 2 in the morning. Isn't that a failure of management?
Why?
Shouldn't they? I mean, there's normally 9 to 5 or 6 or 8 or 10.
Not in startups.
Not in startups.
If managers have a plan and they've scoped it out with you, hopefully hopefully they should be, have given you some heads up on what's happening. You should have some management information systems or access to them where you are able to follow their progress. So, do you get a lot of calls at 2 in the morning?
I mean, 2 in the morning is a kind of a bit of an exaggeration, right?
No, so I'm actually, so let me contextualize that, right? So there is you can talk about plans, but there's a very famous saying by a celebrated American general that everybody has a plan until they get punched in the face, right? So doing a startup is not like running a normal business. It's not that you set a quarterly plan and you have to just go by that. It is the idea that you are raising a round from US VCs who have a 12-hour time zone difference. So actually your call does happen to be at 1 a.m. PK time and the founder is out.
Yeah.
And if the founder is up and taking that call and it's really important that we have that discussion afterward, then I'm gonna stay up for that, right? So it's situations like that.
I think it's also important to say that, yeah, like 2 a.m. sometimes because of time zone, but also startup founders work around the clock. Like it doesn't, again, to what you said, everyone has a plan until you're punched in the face. Building a startup is literally getting punched in the face every single day, right? You're failing forward all the time. And then you can be, optimistic and say, let's build a plan, but that means that if you're a VC that says that, you probably don't understand startups to begin with. So that would be my response. I don't know if anyone has anything else to add.
So a lot of there may be investors on board who are in different time zones, as you said, and there may be a strategic partnership discussion or an investment decision where the founders need our guidance, and that simply cannot wait. It's not that they want to call us at 1 or 2. I also don't think 9 to 5 is just does not apply to this world. But really, we've taken calls at 11, 12 and carried on in the morning because there's a major issue to deal with that simply cannot wait the next day. And I think we, to your point, we have to be, if we expect founders to work like that, then we have to mirror that to a degree.
Yeah. Let's take the question. Sorry? Yeah.
Hi, this is what
We can hear
we
you.
can hear. So thank you all for being here. You continue to be inspirational for a lot of us founders. So, and thank you for taking our time and what you do for the ecosystem. My name is Farhan. I'm the founder of Sare. We are building the ecosystem for the underserved South Asian classical music market that loves the genre but doesn't have easy access to it. Now I know Sarmayacar has already invested in the creative industries, and here in the UK, the creative industries contributed about £109 billion to the GDP. And so I'm curious to learn from the rest of you as well, whether how you feel about the creative industries in Pakistan or in South Asia, and if you have any plans of focusing on that industry as well.
Go ahead.
So I used to be involved with an IPTV platform, Jaga TV. It was on the creative side, but one of the toughest things is monetization when it comes to, especially in the content world, in music and all. So I mean, I've chosen this, for me personally, it's, I think the opportunity in fintech and some of the other larger platform plays in Pakistan specifically are huge, but that's not to say downstream some of these platforms are going to do well. I think Gobi was just acquired like recently as a digital media platform. So there's a huge opportunity out there. I just think that a lot of the funds today in Pakistan, just because the opportunity is so vast, that they're very focused on particular areas that other investors also want to invest in subsequently. And so I'll give you an example for B2C commerce. If there's 100 investors in Pakistan, a lot of them don't even consider B2C commerce. It's very difficult to raise for, just because that opportunity doesn't exist as much in the rest of the world. And so it's similar when it comes to the creative side. But
in the future, I think the opportunity is obviously huge as things get saturated in the traditional realm.
Sorry, we'll take this question first and then we'll go to Fark.
Hi everyone, it's Giles from ICU Ventures. We invest across a number of emerging markets, and even other colleagues make investments in developing markets. So often when we go to investment committee, we get asked about valuations and multiples, sort of boring old school stuff. And I think that Pakistan was very resistant, the Pakistani founders, to let's say contraction in valuation multiples. And I'm wondering what you're seeing now in terms of valuations currently, and also how you think about potential down rounds. Because we've had essentially in our portfolio, some of our best companies may have needed to do down rounds, and we were okay with that. But for many of us, when I started doing venture capital in 2017, I think for a lot of us, we're essentially going through our first cycle. I know that there are Silicon Valley veterans who maybe have been through a few. How is the market feeling about down rounds? And I asked a similar question about this at Dubai, the last tech conference I was at, which was wonderful. And I'm interested to know how that sort of developed over the last, I don't know how long it's been, 6 months, 9 months?
Yeah.
Since we
I
saw
actually
each other.
wasn't at the last one, so for you guys that were there, how would you talk about unfolding that?
To be honest, I think there's still resistance, and this is maybe a message to like some of the founders out in the audience as well. A smaller number is better than zero.
Yeah.
And we as early stage investors would also have to take part of the pain.
Yeah.
I think it's a function of where the market is. In any case, Pakistani founders are always playing catch up with USD denominated valuations, but PKR revenue predominantly. And so no matter how much you're growing with the FX, the way it's been, you're always kind of like trying to catch up to that last number that you had. And I think over the next year or so, we're going to see some companies struggle to get that next bit of funding to get them to a stage where they can then grow into that valuation. And I think it's certainly high time to start realizing that and adjust your strategy accordingly. Maybe also combine that with being more judicious with your spend, trim your fat where it's required. But unless you do that, survival is going to be difficult, and justifying higher valuations, particularly to international investors, is going to be very tough in the environment, like an environment we're in right now.
So I began my path into Pakistan began in 2019. I began investing directly in companies myself. I really bought in and believed the story, and then I wanted to do it at an institutional level. And I took a step back when I saw valuations go completely out of whack. And one of the issues is that the starting valuation meant that after dilution, simply, unless you believe Pakistan could hold billion-dollar companies, simply that could not work. So when we look at it today, I think safe notes, there's this perception that the valuation gap is the value of the company. That's simply not true. And I think what we're going to see is more actual pricing rounds. And I think the resistance to valuation is going to have to drop. And we've had conversations with our portfolio planners and others. We're just 2.5, 3 years in. Our portfolio started earlier than others and it's still 3 years in. What is taking a 20, 30, 40, 50% cut on what is a theoretical valuation because there's no exit yet? Be armed to be able to actually grow. I think people really need to look at, give a chance for these companies to take 5 to 7 years to grow. And that is sort of the message when we're founders push back. We get it, we understand why, but they're looking at it somewhat, I dare say, myopically. I think they have to really project out to 2027, 2030.
Anybody else? Go ahead.
Yeah, so a lot of our companies raise like successive safes. And I think we're having these conversations with some of them that look, some of the safes, even if you got like a $50,000 safe at 50 million, that doesn't mean much, right? So you need to now adjust based on reality. So it really just comes down to quantum of price discovery when there's more investors in the market. We obviously can't reprice our deals, but I think you're going to see substantial down rounds at least in the next 12 to 18 months. So yeah, I think
And there's nothing wrong with that.
No,
Yeah, I think that's
the point.
important
That's the
narrative.
point, and because we see it everywhere. I mean, I see it in Indonesia, We've seen it in Brazil. I see it obviously in the U.S. and Europe. So we all saw what happened with Instacart. I mean, it's
I also think prices were just so high. Like
Yes.
they weren't realistic before. So what it's coming down to is probably much more closer to what the reality is. to
nothing
begin
wrong
with,
with it.
right? So
And then,
yes,
hopefully.
inshallah. Sorry, we had a question that Farouk was going to ask. How many more questions can we take?
Maybe just a couple more.
Couple, but you raised two fingers. Two. Farouk, and then we'll go. Yep.
Thank you. Really interesting discussion. Two quick questions. One, as we're talking about investment flows drying up, particularly from international investors, just wanted to highlight there is immense amount of domestic liquidity in Pakistan, and it's great to hear about the new association that you all have formed. And I'm just wondering if are you guys going to be working on educating domestic, institutional, and H&W investors on these kind of investment opportunities, because there is immense liquidity available, and as an exchange we would be happy to, if we can help support in any way, do that.
Yeah, and for those in the room who may not know,
Yeah.
Farouk, if you can share more about what you're up to with the GEM board too, that thing that's.
No, we can't hear him, so if you can repeat his question.
I will repeat the question, yes, and if you could just share the fact that.
Sure. Is there a... Thank you. Thank you. I was asking, saying that there is immense domestic liquidity available in Pakistan, and almost every business group, H&W institution is looking for investment opportunities. So it's great to hear about the association that all of you have formed. I was wondering if there are plans to educate our domestic investors in these kind of investment opportunities, because that does de-risk you from, I think Aatif, you were mentioning that it's not just Pakistan specific, it's the global macros. So at least you can de-risk yourself somewhat from that, because domestic investors are looking for rupee returns and not necessarily dollar returns. So that was my first question. The second was what Rabeel was saying about sizing the market, and I've always wondered, tech brings in transparency, documentation, and we are hugely resistant to that in Pakistan. And how do you, when you look at your companies, how do you sort of assess that in terms of market sizing? Thanks.
So let's address the first
and
question.
sorry, last thing was, as an exchange, we'd be happy to see how, if we can provide any help, collaboration in terms of domestic investors through our GEM board, the growth enterprise market, or even otherwise. Thanks.
Yeah, and for those who don't know, Farouk runs the Pakistan Stock Exchange. The GEM board specifically is for SMEs and startups to be able to list. So important there. I think a lot of us have been doing education of domestic investors, but would love, and I know a lot of us have LPs that are domestic players, but especially for Fatima, but everyone, I would love for you guys to answer this, but you guys have been, family office that turned into this, and same with Lakson, so how are you guys doing it?
We definitely see the potential in the local market and with the local investors. Like you said, there's massive liquidity, not just with high net worth individuals, but also institutional money. Insurance companies have north of 150 billion rupees lying in cash, and they're only investing in bonds and stocks, and it's an asset class that now we're opening to them. So not only are we educating them, but we're also now setting up a local parallel fund as well, which is going to be give opportunity to large institutions within Pakistan and also high net worth individuals to invest. So that, and in process of doing that, we're obviously with our first fund, but now going deeper into it and tapping into that institutional money, the education is taking place, letting them know of this place, the growth that's taking place, and how they can also not only just learn about it, but also be able to participate actively in this asset class.
So the first fund was set up as a domestic fund. Going forward, we will have a concurrent international domestic fund. So I can speak about our interactions with LPs, and they're bullish. They are, and I think what we would like to do is, and I think we've been very honest with them. The biggest message to them is you cannot look for an exit in 3 years, but and this is a necessary part of the evolution. But what you're absolutely right. There's plenty of liquidity. A number of the LPs are actually corporations, so we can have strong discussions with them. But our thought is I think local money will kickstart the ecosystem, and then international investors will see it. So we'd like to see the domestic funds up and running, and that should attract international attention.
Yeah. Anyone else?
Yeah, just one final point. So it's been a journey. Like, so when the ecosystem really started, like around venture space in 2018, 2019, it was something new, and LPs and big conglomerates, big family offices have gone on that journey. Now, speaking from Sarmayacar perspective, we have some companies where some of our LPs have co-invested larger amounts than we have even invested in those companies, right? And some of that is getting unlocked, and to the point made earlier, you need that local unlocking of capital, otherwise the ecosystem is going to struggle to sustain. On the other point of tapping into liquidity, we need to bring one of these cases to potentially list in Pakistan, one of our companies. I think there are a few ingredients that need to go into it. It needs to be a recognizable brand. It needs to hopefully be making some profits, because otherwise the market is going to not give it any kind of credit or the valuation that is going to be attractive. But it takes one to start, and hopefully, I don't want to say it's going to open the floodgates, but to unlock a local avenue for financing is going to be monumental for the ecosystem. One of our portfolio companies, and actually a lot of us are invested in there, we kind of unlocked Sukuk, which kind of opened up another form of financing for them. But watch one company get listed, and then hopefully we're going to have many lining up, and that's how many ecosystems have gone on and kind of opened up additional avenues.
India has got multiple listings.
Yeah, I think it's also, just want to add too, I think Ali, Mukhtar, and Fatima, you were talking about, but I think it's a great example of a next generation, local family business that started to come into the space. And I think I'll talk to Ali about this as well, is how can people like him, we have one of our investors in the audience who's also a direct investor, but how can you kind of be that next generation that educates other people? Because often, and I think what's really helpful for all of us that have had any of those local investors as investors in our fund is they learn alongside us, right? And that actually helps that education by just seeing, by doing, seeing how a fund actually executes. And then hopefully they will start direct investing. A lot of them have co-invested with us as well, which I think is great. Hold on. We have room for, we're going to go 2 more questions, but there was, just to add diversity, and I'm so glad there's a woman in the back with her hand up. You want to ask the question, and then Noor gets Trump right, so you get to, if you want to ask her question, because he was I have a question, you've read this thing. So
We can ask the questions together, and then you can.
Yeah, why don't we do that?
But Timur shouldn't count as one of the 2 questions.
Okay, then you can take a third. Let's do it.
You make the rules.
Hi, thank you. My name is Rida Al-Sain, founder of Brain Smart Games. So I'm going to be a bit cheeky and ask 2 questions in this slot. So one is, I know that some of you have invested in EdTech in Pakistan, and so what are your views on EdTech and the convergence of gaming? I think Noor mentioned gaming briefly. And when you're looking at founders, what are the 3 kind of standout characteristics that you look for in a founder?
Those are really good questions. Who wants to take the
I'll
EdTech?
take the second question.
I'll do the first one. So.
Okay. So perhaps I'm going to give away a bit in terms of how I look at a founder. So they're the obvious things I won't mention, but I sort of look at a founder as a high-frequency risk manager. So it's all fine to bring forward a well-thought-out, to the best, at time zero, well-thought-out plan, but the real key is at time 2, at time 3, every moment that founder needs to take a step back and do another assessment and do a scenario analysis. Okay, do I need to pivot? Is the sizing of my market wrong? Do I have a fast follow risk? And then if they do the work and they negotiate that issue, they get to graduate to the next iceberg, and so on and so forth. It's absolutely exhausting, and at every point they need to do that. So when people talk about mental fortitude for a founder, that is it for me. There are many other aspects of a founder that has been, people talk about, but I'll stop there and let somebody else discuss.
Do you want to talk about EdTech first, and then we can also talk about founder stuff?
So we've invested in Mukhtar back in 2021. The way we think about, consumer market in Pakistan is that, especially in this high inflation environment, consumer spending is really constrained, but people still spend on 2 things, education and health. So that was always the thesis. And we've been very happy with it. Mukhtar is now seeing 400,000 students use it every month. getting close to 500,000 mark. So the scale is there. Massively young population, even if you just focus on grade 9 to 12, people want this problem solved. The standard of education in schools is just not good enough, even tuitions are not that great. And then the convergence with gaming, and I'll add AI to it, I think like we're at a very unique point where the first step was that, will students use these mobile apps? I think that answer is, it's answered, that's happening. Now the question is, how do we really close the education gap in Pakistan, not just in terms of official literacy definition, but also the quality of education. And I think what AI and gaming allow you to do it is really personalize it, identify where a particular student has those gaps, and then figure out how to make it like game. If you look at what kids do in Pakistan, like I ask my nephews, what do they want for gift, and they're like, Robux, right? That's universal. It's now, people are playing all these games, so that's how you get their attention. It's a very exciting space, and I think there's lots more to do there.
On the founder, I'm gonna throw it to Faisal at the end, my friend on the corner. What do you look for in founders?
Execution ability, integrity, that's one of the most important factors for me, and really resilience, because it's a very tough journey, and so you can't give up. You have to keep getting back up, you have to fail, and learn from those lessons and keep attempting. So
I'm gonna double click on that. How can you assess integrity? How can you assess resilience?
I mean, it's more, resilience is just by asking past experiences, analyzing what they've done.
So proof of like past, yeah.
And then also asking them, have they thought of the motions of this execution? There's one thing to put a deck together, but it's actually, when you actually start doing your discussions about how they're going to execute, you can kind of identify people that have thought through those motions mentally versus just regurgitating a plan from assessment somewhere. Integrity, I think it's more human interactions, and so usually before we confirm, in most cases, we've got a pretty decent amount of time that we spend with each of the founders, and you can assess it. That's where some of the, like, it's not just sitting in a conference room. Sometimes you're having lunch and just talking about life, and you kind of assess things from there. So
yeah, we find that reference checks help too, right? Like people that have worked with them in the past. Anybody else want to add before we go to the last and final question? Sorry, did you want to, or do you want to?
Sure, no, please.
Yes. So the second to last and final question, because you don't count.
Hello everyone, I'm Jay from Clara Ventures. Rabeel, you talked about integrity of the founders. You also talked about, Kalsoom, you talked about someone calling a failure a fraud. So can you talk more about it? Anything fishy going on? Spillage is something that a lot of people also talk about. So can you highlight this, because it really creates that trust deficit and affects the ecosystem really badly. So any messages for current founders, future founders, and also investors?
In terms of how do you detect fraud, or how do you?
No, like how is it affecting? Because it's pretty much, I think it's creating a trust deficit. There are many investors who want to come in, but it affects other founders too. So just talking about it, your experience maybe, or anything that Rabeel wants to add about it.
Just the one message, just like whatever little kind of like fraud you're going to do and like maybe siphon money from one funding round surely has to be less than what you can achieve if you truly put your effort into building something great, right? And so it's really an economically rational argument, which you can try to kind of verify. You can do small little things like, again, we do this bank account statements check, etc. Because actually knowing the financial health of a founder is an important consideration for us, right? Like what are they really motivated by? There's no perfect answer to this, right? If someone is intent on doing something, it's difficult for us to also diligence that. But the way we think about it is like, and to Aatif's early point, ambition needs to be there. But then what are the methods that you're going to employ to get there and to achieve your wealth generation? And oftentimes, also picking up on Faisal's point, interactions in various different settings over an extended period, you get a little bit of a sense. And then we cross-verify that with reference checks, people that they've worked with, You often try to see the co-founder dynamic, what's going on. So like, we try to then piece some of those things together, and then it's ultimately a judgment call. But again, someone who's doing that with the intent of doing it might get away with one thing or the other, but like really, like those aren't really the founders that like we'll be wanting to back, and it's our job then to also pick up on those hints and clues.
But ideally, you also have governance in place, right? And I think that was something that was, in some ways, not missing fully, but something that is something that was needed more of in the 2 years that we saw so much activity that happened. Sometimes governance wasn't always the highest priority, and it is quite boring when you think about corporate governance, but it's actually one of the most necessary things to put in place even early in a company, right? And if you have good governance measures in place, whether it's a board seat for those of us who are investors, how we are thinking about, how we're actually not even diligencing a company, but also how after we invest, we're actually tracking the company and really checking. Ideally, you are able to catch that more quickly.
Yeah, so personally we haven't seen any instance of that. I think you often hear this from really uninformed people who haven't spent time with founders. It's so hard to build a company in Pakistan if you're really, your talent is to, like on the side of the fraud. There are much easier ways of doing that than working crazy hours and do that. In terms of governance, look, we take board seats, there are regular audits, when the company is winding down, they're closing audits. When the company is winding down, they share bank statements. So it goes beyond an audit. Actually, every single account, all major investors get the bank statements as well. They can go line by line if they want to. But really, I think you get to know these people, and we have been really privileged to partner, like all the portfolio founders, really incredibly high integrity people, working really, really hard to solve some important problems. Not saying there won't be any, usually it tends to happen a bit later. Like we've seen, known instances of fraud in the US, they get prosecuted. So I think like, if that happens later in the ecosystem, like it's also important to then follow up and pursue and actually, take the course of the law, and it will happen in Pakistan. But right now, that should be in the top 10 list of worries about Pakistani startups? I don't think so.
Faisal, you wanted to
No,
answer?
Aatif kind of touched upon that. It's this is a global VC phenomenon. The industry needs to get its standards together. Sequoia got duped in FTX. That was a huge disaster. We've had Theranos, we've got some of the biggest banks got duped into that, right? So our industry overall is about speed, and sometimes with speed you lose diligence. So there's got to be some standards, and we have to improve that. So I don't think to isolate Pakistan is fair. Yes, as a nation we do have to fix the general perception. We are highly corrupt. I live there. I can tell you when I move back to New York, it's a huge issue. There's bribes everywhere. But I think if you look at India, we're no different. It's like a base, and they've succeeded as an ecosystem. So it'll take time, we'll evolve, and hopefully technology just brings out truth because everything is documented.
Now, did you want to add anything before you go?
Yeah, I think on the trust deficit part as well, I think if you spend any time in Pakistan and you see these other founders, I think you would see it perhaps with a majority and 90, as you see, percent of the founders are working hard, they're trying to solve problems. We see that actively happening. I think if anyone who comes to Pakistan spends time to learn about the ecosystem, they would see that majority of the cases that are there, they're actually really great founders trying to solve real problems.
No, well, I think I say it on behalf of everyone present here. Excellent, engaging session. Nobody left for the coffee break, so that's a great sign. My question was just a follow-up from the question that our friend asked about the creative industry. So, do you see any VC interest in the future in the sports industry? That's what I wanted to ask. So, anyone can answer.
I think when we run out of other opportunities, look, a lot of this is dependent on what the subsequent incremental investors interested in, right? So I think it's huge. It's a huge opportunity.
We already have investors in the sports industry sitting in the audience,
including yourself.
And I think more industries are popping up, like esports, for example. Is just coming up. I think it's a very interesting space. We'd love to look at it. I think there's a lot more that needs to go into it, and for us to classify it as an industry sub-asset class. but nothing to prevent it. Like, I think it's the same basics we're looking for. Is it like large enough market? Can you really execute against it? Are there like talented founders building something within that? So I wouldn't say that anything precludes sports necessarily from being an area of focus for some of us.
PS7 when it comes out on PS5.
Great. I think we went way beyond the 2 questions that Ellie originally said we could do. So thank you guys so much for being here. Obviously, we're all going to be here all day. We're going to be at the coffee break. Feel free to find us if you want to continue talking to us and ask more questions. But thanks to my panelists, my colleagues here, and thank you guys for being such a great audience.
Thank you.